We all know how to identify a trend in the market. You just have to be looking for higher highs or lower lows. That is what you find on any trading book. However, there is the real trend in the market, not what you actually read in the trading books, which is the way in which the market actually completes the patterns on the different time frames. That is what really sets the trend in the market. So the creation of the higher highs and lower lows that you read in the trading textbooks. And that is something that I got asked a lot of times. So it is exactly what I will be speaking about in this video. Now, if you're new to the channel, I'm a top author on the trading platform and I share free education and analysis on all my platforms daily. So I suggest you stick to the video until the end because it's a quite important video, and I will see you in. Okay, so three things we will be doing in this video. Number one, I will be giving you guys a full breakdown of the situation that we currently have on CHF JPY, and I will show you where is the next potential opportunity for this pair. So obviously by the end of the video, you will know exactly what to look for on CHF JPY to actually capitalize on the next move of the pair. Number two, I will show you how you're supposed to be finding the direction of the market, okay? How the market actually moves and how to find the direction, which is obviously the main topic of this video. And number three, I will give you the trade that we had on CHF JPY to show you a live market example of what I will explain when it comes to the direction of the market, just to really make you understand the concept. So let's start by the main topic, which is how you are actually supposed to be finding the direction of the market. But the way in which you find the direction of the market is by looking at the patterns that the market is creating on different time frames. So specifically on the monthly, weekly, and daily time frame. If you know how the market actually moves on those time frames and which kind of patterns the market actually likes to create and complete, then you will know the direction of the market on all time frames. So for example, if you know here on CHF JPY, which by the way, this is the trade that we just executed with students and just closed on Friday, okay? So it's very recent trade. And how did we know that the market was supposed to continue to the upside? Because we knew that on the monthly, the market had an impulse, correction, and impulse pattern to the upside. So basically, we wanted to see this move to the upside. We knew that at least for a couple of months, in this case 3 months, the market was supposed to have a bullish direction. Why did we want to see the bullish direction? Because we had a bullish pattern on the monthly time frame, which means that for few months to come, the direction of the market was supposed to be bullish. Now, every time you see an impulse and a correction, you want to see the continuation to the upside. You will like the market to give you the continuation to the upside. So you will expect a bullish direction of the market. If you have it on the monthly, you will expect the market for the next months to be bullish. If you have it on the weekly, you will expect the market for the next weeks to be bullish. If you have it on the daily, the next days to be bullish. So in this case, we definitely expected the continuation to the upside. Now, in general, okay, if you have an impulse in the market, and you want to measure the retracement, what are you supposed to be doing? You're supposed to be taking your Fibonacci from the low to the high of the impulse. And what you can see is that the market here retraced exactly to the 0.618 of the Fibonacci taken on the impulse, which is the golden ratio. And you want to see the continuation to the upside. Going down on the weekly, what do we see? Now on the weekly time frame, situation as well was very similar to what we already had on the monthly. In fact, we had an impulse and a correction. Again, after an impulse and a correction, what do you expect? You expect the continuation to the upside. So we expected the monthly candles to be bullish and the weekly candles to be bullish. That is how you find the direction of the market. You look at which kind of patterns the market is creating. And if you know the patterns, you know how they're supposed to play out and you know the direction of the market. And if you know the direction of the market on the monthly, weekly, and daily, then you can go down on the 4 hours and actually perfect your entry to find a very high risk to reward opportunity, 1 to 3 minimum, and I will show you later on during the video. So definitely also on the weekly, we had the impulse and the correction. Now, if you want to measure this correction, what are you supposed to be doing? Taking your Fibonacci from the low to the high of the impulse, and you can see that the market retraced exactly to the 0.382 of the Fibonacci taken on the impulse. Now, specifically, what did we have? When we executed the trade, this was the situation that we had, okay? We had this candle here. I will show you exactly how it was. Basically, let just 1 second because it didn't show me. I can't do it, unfortunately, because the replay tool makes the candle close 1 day later. I don't know, I still didn't understand why. But the situation that we had was this candle here, okay? This candle here with a quite long wick. Now, when you see a candle like this, okay, with a green body and a quite long wick, I made also a YouTube video just about this pattern. When you see a candle like this, you expect the next candles to fill in the wick of this candle, specifically if it happens on the weekly, because on lower time frames, this wick is simply a retracement. So on lower time frames, you will have an impulse, a correction, and you expect a continuation to the upside. And I will now show you exactly that we also had it on the daily time frame. So remember, on the monthly, bullish pattern. On the weekly, bullish pattern plus bullish weekly candle. And on the daily time frame, let's go and see. On the daily time frame, we had a market that as well had the exact same pattern that we had on the monthly and weekly. Because on the monthly and weekly, we had an impulse and correction pattern, and we expected a continuation to the upside. And on the daily, what did we have? Exactly the same thing. When we executed our trade, we had a perfect impulse, perfect correction, and we wanted to see the continuation to the upside. So all time frames were bullish. And in fact, we definitely expected the continuation to the upside and for the market to basically create a higher high to complete all the patterns on the monthly, weekly, and daily. So as you can see, if you understand the patterns, you definitely want to see the continuations, and you're able on lower time frames, aka the 4-hour time frame, to actually perfect your entries. In fact, we were able with students to capitalize on this move to the upside for a very nice 1 to 3 risk to reward to the upside. Now, if you're asking yourself, why was our take profit exactly here? And why was our entry and stop loss here? Now, entry stop loss, I can't really share it. That is part of our entry rules. The only thing that I can share is that clearly we had previous resistance, not from support here, but obviously that is not enough to actually take a trade. We have a lot of other confirmations, but that I cannot share as part of the program. But what I can share is simply the reason for which we had our take profit here. Because if you have an impulse in a correction, okay, why do you want to see the continuation to the upside, and to where you want to see the continuation to the upside? You want to see it because you need to see a higher high, but the higher high is supposed to stop at the -27 of the Fibonacci taken on the retracement. So taking your Fibonacci from the low to the high of the retracement, the -0.272 is supposed to hold the market. And that is the reason for which our take profit was exactly at that area. And in fact, the market hit our take profit and quickly rejected the zone to the downside. The last thing that I want to show you, and then I will obviously go into details on what we can expect next for the pair and how we will be capitalizing on the next move on CHF JPY. Let's go and see what we have from an institutional perspective on the CHF, the JPY. So what we had when we executed the trade and what we have right now. Now, this is the commitment of traders. So basically what the biggest banks and institutions are currently doing in the market, both from a CHF and a JPY perspective. Now, if we check this CHF, we can see that on the Swiss franc, institutions were adding a lot of longs and are still adding a lot of longs. So the Swiss franc is getting very, very strong. We went from having 9K longs from an institutional perspective all the way up to having 16K longs, then 17K longs, and now 17.6K longs. And net positions clearly have been increasing from 1.4K all the way up to 8.4K, with clearly a long exposure of 34% and short exposure of 17.8%. So CHF has been getting very strong. So that is definitely why we also wanted to see the move to the upside and why we were able to capitalize on the move to the upside, because we knew that not only we had bullish patterns on the monthly, weekly and daily, but also we clearly had institutions that were actually buying the Swiss franc. And if we go and see what we have from a JPY perspective, what we can see. Now, if we go and see what we have from a JPY, we can see that a JPY currently is getting very, very strong, even stronger than the CHF. In fact, net positions greatly increased with the last report from 90 into 28K, with 12K longs getting added, bringing the longs at 62K, which is one of the highest levels that we had recently. In fact, we went from 42K all the way up to 62K long positions. So definitely JPY getting stronger than the CHF. However, when we executed the trade, this wasn't the situation. We still had net positions more or less remaining the same, actually decreasing from 27 to 18K and then 19K. So we could definitely expect a continuation to the upside, and that is exactly what happened. This thing that we see here is just for the last report, which still wasn't released when we actually took the trade. So this was a textbook beautiful opportunity to the upside for a very nice 1 to 3 risk to reward that we were able to capitalize on with students. But what is next? Where is the next opportunity? Now, as we have just seen, the JPY is getting stronger than the CHF. And what we also see is that the market has already rejected the zone to the downside. However, at the moment, this is one of those situations where the market is in the middle of nowhere. Okay, we have the previous resistance here, which was supposed to be turned support at this area. However, since we know that on the monthly, the market just completed this impulse correction and impulse pattern to the upside, we might actually see a deeper retracement. Okay, that is definitely a possibility. Going down on the weekly, we know that also on the weekly, the market currently seems overextended to the upside because the market had broken and has broken above this quite strong level of structure, which was resistance here, resistance here, resistance here, resistance here, and resistance here. And all this resistance is now turned support here. And we can definitely expect the market to go and test this level, since on the weekly it is a strong previous resistance now turned support, which is basically our target zone from a weekly perspective. Going down on the daily, what do we have? Actually, I want to make my target visible also on the daily time frame. So if we go down on the daily, what we can see. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Now on the daily time frame, what we can see that clearly the market had previous resistance here, which is now turned support at this area. However, this daily candle still hasn't closed, meaning that we can still expect the market to actually close back above this area and respect it as support. In that case, there is nothing to be done on CHF JPY. But if the market will actually manage to break below this area, okay, at that point, what we will have? We will have a market that from this area will probably give us a retracement, okay? And if the market will actually give us a retracement after breaking this structure to the downside, it will go to retest this previous resistance, which is again resistance at this area. And if the market will actually manage to break and retest this level, then inside of this zone, what we will be doing with students. Inside of this area, we will be monitoring price action with students on the 4-hour time frame that, as we know, is the best time frame for entry. So we will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries inside of this area, we will be taking a nice short with a very good risk to reward and probabilities for the move to the downside and for the market to go and test that weekly structure. But first, we need to see a break below this area, which at the moment we still don't have, because this daily candle still has 11 hours and 27 minutes before it actually closes. But if we will see the break to the downside on the retest inside of this area, we will be looking for proper confirmations for a potential shorting opportunity with students. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, you find linked in the description the complete mentorship program that I have. So the way in which the program is structured is that first you learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, and I will see you in the next video.